Yo, welcome back to CPA Strength. You know what it is, man. If you don't know what it is, I happen to be the strongest licensed CPA in the state of Florida. I also happen to have the best playlist in the world. It happens to be a accounting playlist that'll make all your dreams come true. Go hit this playlist, please. And smash that like button because you know you love it. You know you love it. I'm loving it. This happens to be number 80. Ochenta, right? Ochenta. See? Ochenta. Habla. Anyways, this is accounts receivable. This is also like 7 or 8 in our Widgets Inc. I don't know what it is. What it do, what we got. Let's go. This is D. Staler, real spill. This has helped thousands upon thousands of people by now, probably in the tens of thousands, I would have to guess. I don't know. Step up and elevate in their life, whatever they're trying to do. Now, we're going to do a journal entry. We're going to do accounts receivable. We haven't done accounts receivable yet. We're going to do accounts receivable. This is 8/31, so we're doing journal entry every month. We're going to go journal entry, then we're going to go charge of accounts, general ledger, balance sheet, income statement. Let go. Let's do it. What's happening on August 31st, 2015? What happens is Widget Incorporated performs widget service for $10,000. We'll get paid later. What? You gonna pay me later, dog? Oh, fuck, man. What? I ain't working then. You know, so that's the curveball that happens in business. You know, someone calls you up and says, hey, I need a widget that needs repaired. I heard you're the best around. Your guy's the best around. Will you come out? I'm like, yes. I'm already spending the money in my head. You know, you know, maybe it's, oh, great. And you're like, okay. So you go out there, you're like, hey, it's going to be 10K. It's going to be 10 jizzles. Oh, fine. Then you go for your payment, and they tell you, oh, I don't have it. So that's why, you know, it's always something. So you gotta set up. If you got a $10,000 job, maybe you gotta get a draw, or you gotta get like 20% up front. But that's a whole side thing. But motherfuckers will shiest you. But I wanted to show you what. So let's think, if you've done the last one and you've been following what happens and everything, you'll notice this happens to be the first journal entry that we don't have a checking account in it. So this is the first journal entry that we do not have a checking account. So I want you to see what accounts this actually plays with, and I think it's going to be, well, I think it's very fun once we get down to the balance sheet and income statement. So let's just kind of hurry up and get there, since I've done I think 2 accounts receivable videos with just how I get the journal entries and such. Let me go over this fast. Performs widget service for $10,000. Alright, well, I know that's what I mainly do. I know that's my main revenue, widget servicing. So a revenue going up is a credit, so I'd put widget service credit $10,000 and it's a revenue. Boom, I got my credit. Now for my debit, I know it has to equal $10,000. Sorry, that's my 5:15 a.m. alarm. I get up at 3 a.m. to come film 1 to 2 videos here at my office, and then that's my alarm to do other stuff. Because right after filming this, I'm going to the gym. So what a blessed life, right? Now I used to hate my life, and I try to think more positive. So what a blessed life, right? I wake up, I come film. I love filming. It's one of my passions to make these videos. And then one of my other passions is to exercise and lift weights. And I am in shape, even though I do get out of breath. Please, I can run a mile. I can run 2 miles at a time. So stop with that nonsense. Anywho, what a blessed life, right? Anyways, you're not getting paid now. Usually you get paid, and that would be the debit. But in place of that, you're really getting an IOU, which an IOU, I'll pay you later. You front somebody. That's how I have to think about it, man. I fronted somebody, right? Yo. Anyways, man, you know I love my totem pole rolls. He's vlogging now. He's vlogging, dogging. So If you like the vlogs, if you like maybe the Jelly Rolls vlogging, so yeah, he got him as, I think, a Brazilian wife. Come on, let's go. So you get an IOU, so you fronted somebody, so that's an account receivable, $10,000 asset. Now let's go to our chart of accounts, general ledger board. Changing over the boards. Yo, I know how that one slid up there. It just felt good. What's new on our chart of accounts? Well, we already had widget service. We added accounts receivable. Now when I learned, you know, everything's like, oh, ordinary asset, current asset, fixed asset, accounts receivable, asset, all, you know, 7 different kinds of assets, 7 different kinds of liabilities, 7 different kinds of expenses, cost of goods sold. I didn't know what everything was, so I would rather just know that all I want you to know right now is accounts receivable is an asset. And I don't think that's wrong. Well, what kind of asset? I don't know, an asset, man. Assets equal liabilities plus equity. For this point, for a beginner, that's what I think you should know. It's something coming in, it's an IOU. So that's what we worked with new. So that's our new account. So in our, because we just made a journal entry for it. So in our sub action, in our general ledger of our account, in our chart of accounts receivable, 8/31/15, $10,000. So that means, hey, and we'd have, you know, the company who owes us in case more than one person owes us money. Okay, man, we're gonna run with this. This is awesome. So balance sheet, 8/31 balance sheet. Balance sheet is at a certain date. Income statement is for a certain period. Our income statement is 01/15 to 8/31/15. Okay, we got that. Assets equal liabilities plus equity, 19,000, 19,000. Okay, boom, we're done. I just wanted to I did want to go over that you can't just, you know, you have to delve deeper in to what's involved in that $19,000. So let's first just go over what changed in our balance sheet, income statement. Then I'm going to try to delve deeper into it. So we had 2 different accounts affected. We have our accounts receivable affected, which is an asset, so it goes under here. And then we had a revenue account, widget service, be affected. So let's go to our revenue. Now we've made $22,000 this year in revenue. You minus the expenses, we have $13,000 of expenses total, comprised of different expenses. And then revenue minus expenses is net income, and that's the income statement. So that comes out to $9,000. Now we've been toggling back and forth. The net income's been negative, positive, negative, positive. And the net income carries over through to the balance sheet. So we have so that's the only thing in our equity now, because that's what the company owns, because that's all it owns right now. And it's in positive, so that's good, thank goodness, because it's hard having it negative. It stinks, stinky feeling, right? So we have $9,000 of net income, and that's our equity. Okay, well, I can see that. Now when I'm looking at the balance sheet, I know, and that's why that's on top, because I'd be looking at the top of the balance sheet and I'd say, oh, $9,000, okay, equity. That's good, and net income, so they've made $9,000 this year. Okay, what else has been going on? Well, they have a loan from a shareholder for $10,000, so they owe the owner, a shareholder of the business, I don't know any more than that really, but they owe that $10,000. So they owe somebody $10,000 and they have net income of $9,000. So liabilities plus equity is $19,000. So now that means our assets are going to equal $19,000. This is pretty good. If you have $19,000 in assets, you must be doing really good. Well, I mean, yes, but you have to look into it more. what is that $19,000 comprised of? Okay, now, I mean, the big thing, the liquid thing, is the checking account, $5,000 cash. I mean, no, you can't go better than cash. You know, I mean, it's just, you know, can you afford to buy this? Can you afford to wait for payment? Everything, you know, that's why they say, is it liquid? You know, is it tied up in something? Or you'll see it, but, you know, when they say, what is it, bird in the hand is worth two in the bush. That's kind of, I think, meaning something like this. Like, you know, I'd rather have $10,000. I'd rather have $5,000 in my checking account than $10,000 IOU, because I know those IOUs don't come through, and they're just bullshit. And that's why I don't front anybody. That's why I stopped fronting everybody. I think in the 90s I said no fronting policy. Boom. So JD Blaze has a frickin' zero fronting policy. I don't want to hear it. I have a zero fronting policy, and that made my life easier. Anyways, yeah, $5,000 checking account, so that's dope, right? You have a $4,000 truck. That's nice. You can see the truck. It's running. You've been driving it around. Widget servicing everywhere. And we get to depreciate that later, so that's going to be fun. And then you have something from somebody that says, I'll pay you later $10,000. Oh, I've got my car insurance. I mean, you're last in the list. It's like, if I have anything extra, I'll pay you. And they never have anything extra. Woo! Anyways, yeah, so I went to the balance sheet equals it. The balance sheet a little bit different now. But anyways, assets equal liabilities plus equity. Assets is $19,000. Liabilities and equities, $19,000. You know, there's always so much more between behind the lines here, and you know, not everyone can read a balance sheet and income statement. I mean, I know it's just not everybody's thing, but you know, there's really I know a couple. I know like 3 or 4 millionaires that have no idea how to read financial statements. That's what they have me for. Because they trust me, and it's a good feeling that these I guess, quote unquote successful, I think if you have a lot of money, you're successful to me. That's what I think is success, you know, in the world. Anyways, I don't even know. I hope you like this one. I'll see you in the next one. Everything, let's be positive. Let's be positive. Don't hate. You can hate on me because you're just going to hate on me inevitably.